First of all, thank you so much for joining us at this eve. And guys, Shanti is founder and CEO of Let's Venture. She is a very well-known and respected name in the startup ecosystem. She has helped startups more than over 600 startup raise more than $150 million, and now she is here to share her experience for the aspiring angel investors and operators founders who are looking to start their investment journey. So I'll start from a questions of your own. When was the first time, Shanti, you thought of okay, I want to start investing in startups? And when was the first seed came again for Let's Venture, so that I okay, now let's I have been starting. Have you started investing before Let's Venture, or Let's Venture was the
No,
first,
no, no.
right?
Let's Venture was my first. Through Let's Venture was when I made my first investment, which is actually good for new investors to know, because I think it's a little bit of deeper understanding of how angel investing works before you write your first check, right?
Right.
So just to give you a background, Let's Venture today LVX is my second venture. I did my first venture in 2000, so I'm more a tech person. I was the head of engineering in my first startup where we had raised about 3.5 million before we sold it. And then I joined HP. And then I worked in HP across India and the US for about 8 years, and then came back to India and founded LVX in 2013. So the intent that was, it was more a founder approach to building Let's Venture, because I realized that founders had a lot of trouble connecting to the right investors, and investors had a lot of trouble finding the right founders, right? So that was really very simple vision. We said we want to make the process of fundraising easy for both founders and investors. I honestly did not realize that we would be what we are today when I started Let's Venture, because we've become more like a financial institution than like just a fundraising platform, right? Because today investors, about 5,000 investors, have invested close to 1,400 crores through the platform. And we have helped about 650 companies across 900 schemes, which basically means a lot of companies have raised their next round and the next round on the platform, right? So that's how we have close to 900 schemes. And we have investors from 60 different countries, because I think today India is a very attractive investment market. It was also a very attractive investment market even 10 years back. And I think what investors wanted was a trusted partner whom they could work with, who could actually do all the due diligence and then help them with all the information on the company, help them invest the money, get the share certificates, represent them on the legal side. So I think investing, deciding, and writing the check is probably the first 30%. Then after that, there is a lot more work to be done, right? So people sometimes oversimplify angel investing. And there is a lot of compliance, there is a lot of following the regulation when you invest. So there's a lot of other smaller nuances to angel investing, right?
Sure.
Wrote my first check. In fact, it was interesting because we built the platform, we launched the platform in September, then we launched a transaction on the platform, which was that company has shut down, by the way, right? And we raised about 1.5 crores for them. And I also wrote my first check with them, right? So really did not start angel investing because I was an angel investor, or did not start Let's Venture because I was an angel investor. I started Let's Venture because as a founder, I realized that there was a gap in the ecosystem which required a solution, which was easy on both sides. That was actually the starting of Let's Venture.
That's amazing. Most of in D2C Insider, right? So we started as a community of people who were building D2C brands back in 2018 and 19. And post that, that community WhatsApp group took a shape of an event because people wanted to meet. And then we went on helping now. The initial founding members are now the titans of their respective industry, right? The respective brands in D2C industry. So we started helping them out. We started mentoring them one on one, and then we thought, "Ki, okay, now is a time when we structure all things together, and we started elevate our cohort program to help to give it back to give it forward to the community, and that's when the fund came in place. And now all the founders who were early member at their nascent stage who founded this community are people sitting on a liquid and they're looking to invest. And that's why we are having this call, right?
Yeah. So,
Webinar.
my belief also is that India does not lack capital.
Sure.
I think India lacks the understanding of the asset class, right? And
Right.
that's why we did a lot of angel investing workshops. So I did my first workshop for angel investing in 2013, right? And this was on December 28th in
Oh,
Bombay. And imagine people said, oh, Christmas time, there's not going to be people who will come and attend. But because it was so unique, right?
right.
We had about 60 people in the room when we ran that workshop. And this was like the end of the year, Christmas time, like I said, right? So I think what you're doing is also great, is creating awareness around how do you invest into this asset class. Because my belief is that India has enough capital to invest today.
I mean, most of these founders usually face challenges because they're already running their own startups, right? They're
Yes.
already working full time into that, and they also don't want to miss on good opportunities, and also to mentor them and help them out, right?
Yes,
And
absolutely.
that's when we thought, ki, okay, I mean, a lot of new founders were reaching out saying that, ki, look, hey, do you have any deals? Let us know, right? And that's when we started, okay, let's build a community around and community fund. So we have been running this D2C inside a super angel fund. We have over 50 folks running great businesses and helping other new age startups, right? And I would like to ask you about for this founders on their behalf, right? What are the first few things, right, as a investor, as an operator who is now going to be an investor? Because there's always this tendency to, of course, you want to help them out, right? But you don't want to overhelp or over interfere with their businesses, right? So how
Yeah.
do you define? How do you make a thin line between that?
I think that's a good, very good question, and a very important question as an investor, right?
Right.
I think we have to always remember we are only the investor, right? And as an investor, I'm an investor in multiple companies. But as the founder, I'm the founder of only one company.
Right.
And I am living, breathing my business 24 by 7, right? Like today, in spite of having finished 12 years in the ecosystem, right? I still work like 12 to 14 hours a day, right? Because I think there is enough problems to solve and there's enough interesting people to meet because we are also sitting at that cusp of investors and startups, right? But
Sure.
if somebody, and I have a very active board, right? They help me when I actually want some help. But I think as an investor, we should also allow the founder to ask for help, right? Not say that, this is not how you should be doing running this. I will tell you what is a better way to run it. I think you
Right.
can leave a suggestion with the founder and then allow the founder to make the decision whether he thinks that suggestion fits into the rest of how he's running the business, right? Because I also believe there are a lot of investors who believe I understand, how you should do this. But I think it is a little different from an operator founder perspective. So if you have an operator investor, I think because of the fact that they've already built a company, I
Sure.
think they will have much higher empathy towards the founder, and I think we know as founders how much to get into another business.
Sure.
That's the gift you bring because you have also gone through that path. You have also gone through the journey of building your own company. And you sometimes know how difficult it is when somebody starts to put in their own advice without understanding the complete scope of what you're doing. Right? Because as an investor, you probably talk to the founder 2 hours in a month, right? 2 hours in a month versus, the amount of 150 hours I'm spending on my own company. I think there is a little bit contextual difference that starts to happen. But
Right.
I believe, like from my own experience, just to point this out, operator investors are probably the best investor profiles because they've been on the journey, they understand the business, and they understand the pains of starting up. They understand when a founder just needs to talk to an investor without actually seeking out very specific responses, right? And they have proven to be one of the best investor class.
Sure. I mean, let's go a bit backward, right? And let's go with the first questions any people when they think of investing arises, right? The first thing they need to sort out is capital, right? So, what
Yes.
do you think or should be the capital size to start their first investment journey, right? Or what should is it should be deal by deal that Okay, so that's multiple question, right? So if I want to start, right, I don't want to, of course, I don't want to deploy in just one cap or one startup and wait, right? So let's take a 1 year timeline. In 1 year, how much capital should I, as an first time angel investor, deploy? How many deals should I put my money in, right? And what's the average
It
success?
depends on your total net asset, right? So if I have 1 crore to deploy in all the different asset classes, I would say as a first time investor, probably pick 5 to 7% of that in your private market because
Right.
it's the riskiest asset class, right? You cannot plan your children's education or retirement planning based on the returns you will get from this asset class. Though the returns are outrageous when you get it right, but you cannot plan around those returns, right? So there's a little bit of nuance there. So if
Sure.
I were to, like I said, keep aside 1 crore for investing, and I'm not talking about investing into private markets, investing in general, mutual funds, real estate, savings account, all of that, right? You probably take only 5% of that into your private markets, right? For me, those ratios are higher because I'm actually in the industry. So probably for me, it's about 30 to 40%, right? Because
Right.
I cannot think of the other asset class. Somehow my mind is tuned towards startups, right? But that is not true for new investors. That's
Sure.
the first rule of thumb. Second rule of thumb is you should start with smaller checks, right? I have had people who say, I have now 1 crore to deploy, so I will find 4 startups, put 25 lakhs each. No, 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 you should not do that. In fact, I have picked up the phone on some of my investors and told them that probably you want to go down to a 5 to 10 lakh check size, right? Because these are your first investments. Typically, as you meet more founders, your ability to understand which deal is better and your ability to know which deal you feel passionate about starts to change. So this is one thing you cannot outsource to ChatGPT, right? This
Yeah.
is a wisdom game, right? Because the more people you meet, the more understanding of people you have, the more you're able to interpret what the founder is telling you, right? And that ability to just stay tuned to actually then saying, do I resonate with what the founder is saying? Do I really think the problem is big enough to solve? Do I think the founder is authentic, right? All those questions starts to get clarified, right? So as a first step, some thumb rules. One is, of course, keep only five. If you're a new angel investor, all of this is for new angel investors. Keep aside only 5 to 7% of your asset allocation towards private markets. Within private markets, there are three categories of assets. There is an early stage, there is a growth stage, and there is pre-IPO secondary. So that all should come within that 5 to 7%. That is first. Second is start with smaller check sizes if you're getting into early stage, right? And third is that I would recommend at least meet about 20 founders before you write your first check, right? So don't write the first check, the first founder you meet, because you are going to suddenly then meet more people and say, oh, but I didn't like that guy, right? This is like buying a house or, making a serious investment. And while some people might not think that 5 lakhs is big enough, I think it's more about building the discipline and training yourself to be a good investor. It's not about the check size, not about the capital. Somebody might say, 5 lakhs is not big enough for me to do so much, right? But I think it's about training yourself and building the discipline to become a good investor, right? So that is the third point. Because every check you write into a startup, the moment you write it off. You expect that the startup is going to shut down. And I have
That,
seen startups shutting down after Series A, after raising so much money, they've shut down, right? So it is a highest risk asset class. I think if you don't have the ability to write a check and write it off, you should not become an investor because you will become a headache to your rest of the investors. You'll become a headache to the founder because you'll constantly be talking about return. When am I going to get my return back? When am I going to get my exit? It does not happen that way, right? That is a third point. The fourth very, very important point is you have to take a portfolio approach to angel investing. So typically you should at least plan to write about 20 checks, right? Over the next 2 years. See, I think one thing important which people miss is that time is also a diversity part in a portfolio construction. So you cannot construct a portfolio in 6 months to 1 year.
Exactly.
Like if you had invested only in 2021, I'm 100% sure all your investments would have been written off today, right? Because the market was at its highest peak. The price points were not right, right? But every industry goes through its cycles of ups and downs. Every industry goes. We see it in real estate, we see it in the stock market. So don't think that this particular industry is any different from any other financial asset investing behavior. The behaviors are the same. It's just that for some reason, the enigma of this asset class is way higher than the enigma of other asset classes.
Right. Yeah. And going after that, I mean, the next questions I had was that when I'm deciding, okay, now I have decided this is the check size I should invest in, right? Now, should I go solo or should I go with syndicate, a group of people, or should I choose a platform to invest in? So, what do you recommend?
I think there's no right answer to this.
Okay.
There's no right answer. Do what works for you. See, if you want to go solo, and if you're going to write a 5 lakh check, you have to have a founder who wants your 5 lakh check only, right?
Right.
Or if I don't know how many founders just want a 5 lakh check, right? So for you to be able to meet 20 founders, decide which founder you want to invest in, and why would a founder talk to you? You have to give me that answer, right? What is the incentive for a founder to talk to you? So if you are already like a D2C big boy, every founder will talk to you, right? And
Sure.
that is what access is about. But if you're not from the industry, you're not well known to other founders, then how would you get access to the best transactions? See, private market, that is the difference between public and private markets. Public market access is open to all. Private market access is the differentiator. Your ability to get to the best founder is what differentiates you as the investor. And how do you define the best founder? It is a retrofit index, right? Only looking back, you will know whether that founder was the best founder.
Exactly.
So there is a lot of nuance in this private market investing, which sometimes people tend to oversimplify.
Sure.
You want to go solo, you can go solo if you're already a very well-known domain expert and well-known founder. You will have access, you can go solo. Already have a group of your own investors. You belong to a like an IIT network, or you belong to a Bits Pilani network, or there are a lot of networks, right? Where deals are coming, you can go operate through that. You want to actually then follow an investor who's running a syndicate, you can go join a syndicate. That is why I created Let's Venture, right? Because I believe that there is a lot of, if I may use the word, elitism in the way angel investing happens and the way access is created. Why should you not have access to a good transaction if you have the willingness and the capital to invest? Why do you need to be part of a syndicate or a network or know people, right? And Let's Venture was exactly designed for that. That I don't think wealth creation is a elitist option, right?
Right.
Wealth creation should not be only for the privileged few. It should be allowed to, you should be allowed to create wealth if you have the ability to take the right risk and if you have the capital to come in for that risk. So that is why, and the way we onboard investors on our platform, you come to us, you fill a form. We have somebody from the team who calls up and speaks to you. And we just want to make sure that you understand it's a high risk asset class.
Right.
That's the only question we ask, right? Is like you understand it's a high risk asset class. Because I don't care if you have money. If you still think that I want an IRR of 14% at the end of every year, then this is not the asset class for you. So there is a mindset to becoming an angel investor. That's the first. Then second is, of course, we have a SEBI requirement of taking all your KYC documents. We do that, and then there is a fee for you to onboard onto the Angel AIF. You pay a fee and then onboard to the Angel AIF, and then you start investing. And after you invest in a company, we give you quarterly portfolio reports. We represent your rights on the cap table, right? Then we also give you portfolio reports every quarter. And at the time of exit, we take care of the entire exit working, talking to the next round investors. We do all of that. Right.
Right.
I think one of the things I want to point out here is the only challenge of going as a solo or as a syndicate which does not understand the space too well. You may not get the right rights for yourself as an investor. But when you go as a group, like if you give 5 lakhs, the guy is not going to give you much importance when he actually goes to the next round. But if you go in with a group of people, right, and you actually now have like 2 crores syndicated, your ability to then, because you have a higher equity shareholding in the company, your ability to represent that group is higher.
Yeah. Um, so now I have decided the check size. Now I've decided the
Yes.
platform and the means to invest, right?
Yeah.
I've also shortlisted few founders where to invest my money in. So after your, I mean, journey of investing of over more than now what, like almost 15 years, right?
10
So,
years, 10 years. Yeah.
yeah. So, what do you think? I mean, what have you seen? What are the few traits of founder and every early, especially early stage investor should, because you're betting on founders, right? So, what are few traits you should look in founders before putting your money in?
I think the one found trait I look for, which is non-negotiable, is just the clarity of thought. Like your depth of understanding of the space you're trying to solve the problem, and your clarity of thought, and non-negotiable ethics. Like, don't drop names. Don't tell me numbers you've not achieved. Don't try to convert a soft lead into a lead which is converted. So your ability to tell the truth to the investor when you're talking to him, right? And your ability to think very deep and think big. I think as a founder trait, those are what I look for. But besides that, for investing, you should also look at market size, right? How big is the market? Like if it's a very niche market, that but there is a lot of questions around market size also. So it's not like when you invest, sometimes markets could look small but could become big over time, right? And that is why it is risk. That is why the risk element comes into angel investing, right? Because it's very evolving.
I mean, the third thumb rule which you talked about, right? That when you're investing your capital, just write it off. Think it's gone.
Yes.
So that's
Yes.
one of the important things everybody should
Yes.
keep in mind while investing. Okay,
Yes.
that's great. Now I have this questions. Okay, now I have decided all these three things, right? And now I know what founder to look in. And nowadays we're seeing a lot of new sectors emerging, right? And people are going very much into niche, right? I mean, of course, there's D2C. Then we saw that new commerce, sorry, a quick commerce emerged as a new category in itself, right? So now there's a lot of options for me to invest my money in, right? What do you think as an investor and as your personal preference also? What are the few sectors you are bullish about right now, and what are you looking? And what sector do you think? I mean, not a right question to ask, but I'll still. What sector do you think not to put money in as an especially as an early age investor?
So I would not say there's any sector I would kind of write off. I would not do that, because sometimes you would just have a very bright spark in a sector like education today.
Exactly.
Education is out of flavor with everybody, right?
Yeah.
But what happens if we suddenly see a winner in education? Then everybody will go towards education, right?
Right.
So I would not write off any sectors at all. I would keep my mind very open, because you could just meet someone who has a very, very good view of how he wants to solve for that sector, right? But in terms of the sectors which are emerging and evolving, and that is why this space is so interesting, honestly. I mean, that's why I feel like even today, I feel I'm in day one of Let's Venture, because you're not doing the same thing every day. Every year, sectors are changing. Every year, you're meeting new founders, right? And today, if I were to look at sectors, I think it is moving towards deep tech. Deep tech is now people are starting to understand deep tech a little better, right? So deep tech, of course, AI, right? AI is going to just blow, and we don't know where the winners are going to come from. There is so much froth in AI that we will suddenly figure out that there is one company which has broken out, right, in AI. and AI in different levels, right? Foundational levels, I don't think India has too many solutions here, right? You could actually have agentic, now the new thing is agentic AI, right? So a lot of evolution also happening in the AI space in the last 6 months. Like in the last 6 months to 1 year, I have seen so much of change in AI, right? Then we have defense. It's very obvious. I think every country is now trying to build their own tech and trying to build their own kind of the solutions around some of these sectors. There is climate, right? There is, of course, there is consumer brands, and D2C will continue to thrive because India is a consumption economy today, right? We are seeing higher GDP growth, right? Which will basically translate to people having more free cash, which will then go to discretionary spending, which will then come back to some of these consumer brands, right? So
Right.
that's going to happen. We are seeing awareness towards health, right? If I were to look at um, AI in the physical world, I call it, which is basically drones and robots, right? Again, deep tech, AI, physical world, right? That intersection of all of that, uh,
Right.
right? Then we are seeing a lot of the brands, of course, are, like I said, they are coming up, right? We are seeing biosciences come up. So, a lot of diverse options.
Got it.
I
And
typically like to go when I understand little bit about the company. I don't like to blindly go in just because somebody else is investing. No, that is not why we kind of do that.
what do you consume to get yourself updated, right? What's publication or any particular
Lot of
magazine?
work. Lot of work. Actually, it's very difficult to keep yourself updated.
Right.
And that's why I said I still work very long hours because I also start feeling FOMO. Like just yesterday I decided, like not yesterday, about 2 weeks back, I decided that I'm going to at least meet about 50 deep tech and AI founders. So I've started setting up calls. And for me, I'm very grateful because founders are willing to talk to me, right? So they're willing to give me time. They're willing to pitch their idea. And the calls, I'm telling them that I'm not setting up the call because I want to invest in you. I want to just have a call because I want to understand what's happening in the space, right? Because unless you don't yourself invest some time, I mean, this is like learning. No, you have to invest in learning. I don't have an alternate answer because I think publications and reports, I am not, I don't
No.
follow it to follow to
Yeah.
actually get it.
I mean, because I met few founders a few months back whom we onboarded on our Super Angel fund, and the entire reason for them to invest in our fund was because now they have built, they are running their business very successfully. Now they want to start, but they just don't want to start. They want to be part of it. They want to learn how it goes, right? So they have requested us to be part of their evaluation process and see. They just want to be observer and see how everything goes end to end. So I think yeah, that's one of the thing to do
Yes, I agree.
us and talk to
I'm
people.
not a big fan of reports.
Right.
See, reports will give you macro. I think the important thing is to understand the micro movements. And
Exactly.
I was talking to an investor last week from New York, and he said everybody talks about macro. He said India is all about small micros.
Yeah. Um, Great. Now it comes, okay, I have deployed my capital, right? As an investor, I have deployed my capital, the founder I wanted to, through the channel I wanted to, right? Now, what's post investment? What do you think as in as an angel investor, right? How much, as we already discussed a small bit of it, right? But how frequently should we support, or what should be the process of post investments journey? How does it look according to you?
See, as a platform, we offer quarterly reports to our investors, right? And typically, what we tell founders is if you need some help, you can ask for help from your investors. That's the best way to engage with our founders. Like I have invested in a lot of companies where I just let the founders be because they reach out night 9 o'clock, 12 o'clock. They'll message, they'll say, "Do you have this connect?" Founders are a very unique are very unique people, no? Because they're all thinking of their problems in the night. And suddenly they want to message you and then ask you something. So you respond to them. So while it is good to manage your portfolio like a financial dashboard, I think from an investor founder interaction, You should build enough good relationships with your founder to be able to offer support when the founder needs help. I think a lot of investors I see sometimes, they are very suspicious of founders. Like, there's a founder who's gone on a holiday and he's putting up Instagram photographs, and they are like, oh, I put money into him and this guy is enjoying himself. I'm like, but people also need to have that personal life to be able to build something professional. So as long as they are not using the company's money to go have a holiday, I think everybody is entitled to do what they want to do, no?
Sure.
I'm just bringing these up because these are very subtle points which comes up.
Exactly. I mean, these are critical things which people usually don't talk about, right?
People don't talk about, and because people always want to say what is right, and I have seen enough of bad interactions between investors and founders. Investors are like, he's just not bothered about my money. Imagine he's given up 6 7 years of his life already for this, and if it's not worked, it's not worked. Somewhere you have to pull the plug at times, right? Sometimes if the company is doing well but the exits are not happening easily, people get impatient, right? So I think we have to also know what role you play in the founder's life. Right? Like if he has raised 30 crores, and I'm just giving an example, and you
Sure.
5 lakhs. Now
Right.
we have to keep the view contextual to what your role in that organization is. No?
Exactly. Exactly.
Yeah.
So now, okay, now post investment journey we discussed, what is the right time for angel investors to take an exit? And
So
what are the methods
we
if you can
can't define the right time. That's the problem. We can't define the right time. I think we have to wait for the right time. I cannot say now I want to exit, so exit. Now exit has to come. When an exit comes, do you choose to exit? Like I have at least offered 30 to 40 exits to my investors on my platform, and they say no, we don't want to exit. So there's one company which had raised 250 crores. In the last round, he offered an exit to all my investors. And everybody's like, oh, you're trying to buy me out. I don't want to exit. And last month, the company shut down.
Sure.
Okay, and people were so mad. But we said we offered you 2 times exit, no? So I think again a very nuanced game. There is no formula to exits. I think when you get an exit, I would recommend to investors to have a thesis for exit, where if I get an exit, let me exit my principal amount. तो एटलीस्ट मेरा पैसा बच गया, उसके बाद जो भी मल्टीपल आएगा आने दो, राइट? Like
Yeah.
somewhere you have to have a exit thesis. When you get an exit, you can't now say, I will wait for another 3 years, because we don't know what's going to happen in the next 3 years.
Right. Yeah. I'll take another one. So now I think we have covered all the sections of investing, right? From
Yes.
pre-investing, investing, and then post, and then exit, right?
Yeah.
Now, I would just answer a few of your experiences. Like, what has been one of the best memories of your while investing, or any founders, anything, any interaction with founders you still hold on that? Do you remember any?
So I have a lot of them, lot of good memories with founders, right? Like there is a founder I invested in his first round, in his first company. It was a YC company. I actually told him go apply to YC. Before I invested, then I told him you should apply to YC because your idea is really good. He applied, he got through YC. Then of course he became the hot company. Everybody wanted to be in. I was already with him. Okay.
Right.
And then the company shut down, right? And then he started his next. I was the first person who came to for it for next. I also put the money in the next company, right? Because I know from an intent perspective, the founders are working very hard to build something which is very valuable for shareholders, right? So that is one good company. Then I had another company which was in the impact space. Everybody's like, oh, this will never become big, blah, blah, all that. 7 years, he gave us a 10x exit. So
That's
I don't
amazing.
know.
I think we should go a bit more deeper into this, right? Because we have discussed the good part of investment. Now, when as an investor, I see that this company is just going down, right? I'll have to write it off. So, what should be a role of an investor to make that company survive or revive?
Yeah, so I think I'll tell you what, just not on the investor. I think we also have a founder problem these days. when the founders start seeing that the company is not doing very well, they shut down all communication. And that is not good, because I think if founders come back and tell investors, how can you help me? Right? I think a lot of investors will come forward and help them. Like, okay, can I take this and try to sell it to a company where at least we recover our capital? Right? But I think I also see a lack of trust between founders and investors, right? So founders are not very openly talking about their challenges,
Right.
and then investors lose money. And it's, I think, fair that investors get upset, because I am not upset if you tried hard and didn't make it work. I am upset that you thought that you can solve a problem you're not able to solve and didn't ask for help. And then you सबको लेके डुबाया एक साथ, right? So I think that as a company is starting to get into trouble, the investor is a beneficiary of your company. He's a shareholder. So I think as a founder, we need to build that trust, right? But of course, at the time when the company shuts down, I think the best thing you can do is take a tax write-off.
Great. That's a good one. Uh, I guess we have covered almost all the things. Would you like to share any last note to all this aspiring investors?
No, no, I have no like magic formula here. The only thing is just keep talking, just keep learning. I think it's very, very interesting space. I love it. I love what I do today.
Sure.
I
Uh,
absolutely love what I do, because I think you get to interact with some of the best founders. You get to meet some amazing investors. I think we make a lot of good friendships. So I think it's good. Yeah. But I think, like I said, my last piece of one thing is, it is a high risk asset class. Don't let anyone tell you that there is a guaranteed return, right? You have to write the check and write it off. I think that is the mantra.
Exactly. I think that's one thing everyone should remember, right?
Yeah.
And it was amazing chatting with you. Thank you so much for taking your time out on Thursday evening, and especially thank you all the attendees. And do you mind if I share your email ID with few of these guys who have any
Yeah,
questions?
yeah. Sure, sure, absolutely. And
Uh,
happy Independence Day to everyone.
you too, happy
I think a
Independence.
lot of people will be off on a long weekend now.
Right, right. So I mean, we have 26 folks right now. It was at 35 in between. So
Yeah.
amazing. All of you guys participated in this webinar. It was amazing chatting with you, Shanti. Thank you so
Thank
much.
you.
Thank you for your
Thank
time.
you. Thank you.